But for CPF, you can't.
SRS. And what is SRS?
I don't think so.
3,
Just
2,
hold on.
1, go.
Hi, I'm Estelle. Welcome to today's episode of Coffee, Tea, Money Talk.
Very good.
Today we have Ben over here, Lenin, Estelle and Kieran. Yes. No worries. So I guess in today's podcast we will be discussing on
SRS. And what is SRS?
Ben, what is SRS?
So SRS stands for Supplementary Retirement Scheme. It's basically a scheme for you to reduce your tax while planning for your retirement.
Is there a ideal age that we should start using for SRS in your opinion?
It's not so much ideal age, it's more about income level. Because what happens is you're taking your cash and putting it into something which you can only draw upon much further down the road. I think it's 63 currently, but if you signed up earlier, it was 62.
So based on what you are saying is that based on the tax bracket
Yeah.
right now, you feel that anybody that's earning above 100, it will make more sense.
Yes, because if you are not paying a lot of tax, it doesn't make sense for you to use your cash to reduce something which is not a lot.
So is it compulsory? Like, sound a bit like CPF to me.
Yeah, it's not like CPF, but it's supposed to be for retirement. So CPF is compulsory by government. SRS is voluntary by the individual. So it works similarly, except that your draw age is a little different. Yeah, so if I'm not mistaken, now it's 63 for SRS, you can start to withdraw. But then there are also a lot of criteria before you can start to withdraw at 63.
I can just put in any time to SRS?
Yes, once a year. If the maximum you can contribute annually is 15,300.
For Singaporeans and PR.
Yeah.
Singaporean
Okay,
can be,
to add on, I think we will also need to find an agent bank to open your SRS account.
The three local banks.
What agent bank? You mean insurance agent?
No. As in,
Three local
three
banks.
local bank, which is your DBS, OCBC, UOB. So you can go to any of these three banks to open the SRS account.
And then you can start contributing to this account.
You just need $1 to start the account.
But I think need to pay attention to the deadline. The deadline of 31st December, right?
Yeah, there's a cutoff date. There's a cutoff date and cutoff time as well. To actually.
So there's a tax benefits.
To be in time for the tax rebates or relief for that particular year in that context.
So SRS, other than planning for your retirement, is also for your tax relief. So if you contribute the max of 15,300, you get to knock it off your annual income. So you get to knock off 15,300 from your annual income.
Actually, I think my Amor friend contribute more than that. For foreigners, I think for EP holder, foreigner who works in Singapore,
35,700, I think, or something. Yeah.
Yeah, because they don't need to contribute CPF. Yeah.
what's that, 35?
35,700, if I know.
Wow, actually a lot of money.
Yeah, there's a lot of Malaysians and ASEAN's employees here in Singapore.
Mostly EP holders lah.
EP
holders, yes.
high
EP,
level,
high
high
level, and
Yeah.
they are probably to
You
look
still need the
into-
100K annual income minimum.
Yeah, and most of the time they do this because they are looking to stay in Singapore for a longer period of time, and they use this as part of their retirement planning to supplement what they don't have for CPF. I think that's normally the case and their mindset behind it.
So foreigner also still have to go to a local bank to open.
Same. All is with the three local banks, and then you can. I think something different that Ben missed out is that within SRS itself, right? You are able to invest in different instruments, but for CPF you can't. You can't tell the CPF board, I want to invest this, like that. No.
He will want to invest in tech stock.
SRS can.
SRS can.
SRS can.
SRS can. Yes, correct. Yeah, but with CPF money, you can't really tell them what you want to invest in apart from you using your CPF OA or SA to invest in. But there's a lot more restrictions in that. But SRS is a little bit more relaxed. You still can invest in some of the stocks, some of the unit trusts, mutual funds, or even guarantee streams of instruments as well. So a little bit like cash, but at the same time it gets lock up for your retirement in that sense.
Lock up for your retirement. So wait, I cannot anyhow take out my money?
So you can take out your money anytime. It's just that there'll be penalties attached to it if you withdraw it before the statutory age of 62 or 63, depending on when you open your account. So if you withdraw any amount before 62 or 63, the amount withdrawn would go, 100% of it will be placed under your accessible income, and it will bump up your income tax.
Oh, so if I have rental income, I better be careful, right? Then it will add on to my income as well, right?
How many property you have? So many rental
That's
income.
SRS will help you reduce your taxable income.
But-
so you got rental income, then you get an SRS account, contribute.
So rental income only comes into play, let's say if you start to withdraw your SRS amounts at 62 or 63, because rental income will go into your income. And if you were to draw, let's say, the 40,000 that we normally play around with, it will be 40,000 plus your rental income for the year. So you will be taxed even more. So that's why it's also very important how you plan for the withdrawal of your SRS monies.
So Ben, you're saying that this will happen after 63 when you start to draw out the SRS amount, right? That's what you're saying, right?
With the rental income or without.
With the rental income.
You got me confused also. I was trying to listen. Exactly which part are you referring to?
No, I'm referring to because he was saying
Yeah,
that.
correct. I got a bit confused.
Yeah, I also got a
Good
bit
that you
confused.
asked.
Yeah, so because you are referring
total
to
income.
this guy
Yeah.
already got a sum of money. He
So-
already reached age 63.
Okay.
Yeah, so because he has this lump sum in his SRS, but he take out the lump sum.
So if you withdraw after 63, 50% of what you withdraw is taxable.
Okay.
So assuming you have 100,000, you withdraw the 100,000, 50% of that, which is 50,000, will be taxable based on the income tax bracket.
So 50K plus the rental income
Yep.
is taxable,
Yes.
but the 50K no tax.
The other 50% is no tax.
Yes.
Okay.
But if you were to do that, then the total amount that is liable for tax, actually, it doesn't matter whether the 50 is taxable or not really.
So what is the best option?
The best option is
Yeah, I'm
if-
also a bit
if you
confused
can-
there.
So what is the best option?
So normally how we do it is if you can withdraw, you try to plan to withdraw 40,000. So you have to plan your income to be about 40,000 a year.
Okay, now we're referring to this 100,000.
So if 100,000, then assuming you have rental income of
Yes.
20,000 a year,
Where
right?
got 20,000 a year?
Assuming-
nowadays, rental income.
People SRS also a lot more than 100,000.
Yeah, okay. So
Right.
you give
So
us,
smaller numbers easier to plan. So if you have 100,000 and you have a 20,000 annual income, so to meet the target of 40,000 so that you reduce your tax, you would take out 20,000 from SRS, and then plus your rental income of 20,000, you will not be paying income tax for that year.
Basically take the total income into consideration. Don't just think of your SRS. You must consider your working, or whether you got rental income, or got other how many property income you have. Then it's take a total income approach. Don't just think of your SRS, because when they tax on the total income approach.
But that being said, I mean, if you are marginally more than 40,000, the tax also is not that much.
so the magic number is your
40.
income should not exceed 40.
Yes.
When you start withdrawing.
If you want to choose to withdraw your SRS, your income should be as close to zero as possible so that you can maximize the withdrawal from SRS.
That means when
Without being
you
taxed lah.
Yes.
stop working, most likely when you're
Not true. A lot of people,
retire.
60, 65, still working.
Yeah, lah, my dad 70 still
Oh,
working.
same.
Contract staff still taxable.
Mm.
Yeah.
Then how? Then later work until one day no longer around. Then the SRS, what happened? Nobody know I got SRS.
That one, then you need the will lah. So that one, cannot think of the word.
What word?
The planning.
Estate planning.
Blank.
Wow. Estate planning.
So yeah, so estate planning will come into play for that one.
Okay,
But
okay.
for now, anything under 400,000 upon death of the SRS account holder is not taxable.
400,000.
400,000.
Yeah.
You bye surrender IC, non-taxable.
Yes, if the individual were to pass away, assuming he has not withdrawn any amount before lah. So as long as you've not withdrawn any amount from your SRS, the first 400,000 is not taxable upon death.
So to say this guy can delay lah, he delay until age 68. But I never withdraw, but I conk off. Inside got 400,000, non-taxable.
Yes.
Government give you discount. But what if $401?
$1, then the $1 tax oh.
So
Okay, good question. Then how much the $1?
$1 be taxed.
At 50%.
At what percent?
No. So the tax will be 50% of that.
Of the amount.
$1. So 50
cent,
cent. Then
based on that year of accessible income.
Then it's 50 cent, where got? It's zero ma?
Zero lah. Less
Yes.
than 20,000 based
Yeah,
on
yeah,
the current
yeah.
tax bracket is still zero lah.
Okay. Good to
Correct.
know, good to know.
But SRS, what if I sometimes don't want to work leh? I sometimes want to work, sometimes don't want to work, and then I don't want to contribute. Can not?
can. It's not compulsory because it's ultimately a voluntary scheme. So you can contribute as and when you feel. So it's not only about whether you feel like you want to contribute. It ultimately, the goal is to ensure that you try to reduce your tax. So if you're not working for, let's say, a year, you don't need to contribute anything because your tax will be zero, assuming you have no property or any other sources of income.
Cannot be lah. You want to contribute SRS means your earning capability is very high already.
But I just want to act pretty and don't want to work leh.
Then you got rental income leh.
Need to find a rich husband.
That's why. Later a rich husband give you good rental income leh.
Yeah, then very different story altogether.
Very different already.
Yeah.
But high income also need to pay high tax ah.
That's why
Then use SRS.
Yes.
To add on the SRS part, I think Ben also didn't mention about the withdrawal sequence, right?
Oh yeah. So withdrawal sequence, you have upon reaching 62 or 63 and you start to withdraw, then you have 10 years to empty the account.
So I must withdraw. Ah?
You can choose when to withdraw, anytime after 63, but once you start, be it 65, 70, 75, you have 10 years to withdraw the entire amount. If you don't withdraw the entire amount, whatever is left over, 50% of it will be taxable.
So okay, I'm a bit confused. Just now you're saying I can withdraw lump sum.
Can.
Then now you're saying that I withdraw
Over
10
10
years.
years.
over 10 years.
Yes.
So you got 10 years. So you got 10 years to withdraw, finish your SRS amount of money. But the 10 years can start anytime after 62 or 63, depending on when you start the account lah.
Okay.
I think that's a very, very important part because if you don't withdraw finish during that 10 years, right, whatever there is balance inside the account, let's say for example 200,000, will be straight away taxed at 50% at the end of 10 years upon your first withdrawal.
But
Yeah.
I hear my financial advisor say that don't anyhow just try to withdraw a few dollar or $100. He said once you start the withdraw even a small amount, you will kickstart already.
Yep.
Something like that. He said.
So you have 10 years once you do your first withdrawal.
You're saying that the 10 years is not in a fixed amount. I thought it's always in a fixed amount.
No, you can decide how much to withdraw because, like, for example, the rental example, if for that year you don't have any rental, you can withdraw more from your account.
Oh, so the moment you start is 10 years. First year 2024. My last year to withdraw is 2034.
What is
Yes.
some years I don't want?
Yeah,
I don't want to withdraw some years.
Cannot.
Can. I mean, as long as... So the government just requires you to either empty the account within 10 years. If not, whatever that remains after the 10 year, 50% of it will be chargeable of income tax.
So what I mean is that 2024 I withdraw a few thousand. Then
No
later
tax mah.
2025 I forgot to withdraw. Then will it skip a year?
No. The 10 years starts when you do your first withdrawal.
The first withdrawal.
Oh, so
There's
even I
no-
forget to withdraw, the 10 years continue count.
Yes. It doesn't skip the year
That's why
because you do
Kevin
withdraw.
say my later part, if you suddenly draw out a
big lump sum.
yeah, 200k, then 50% is non-taxable. Then that 100k is taxable on the prevailing.
Maybe take the 200k and retire overseas.
Go Bangkok.
I don't want to go back. Only you want to go back.
no, he want to go Bangkok.
But I think the most interesting part about this SRS planning, like what I mentioned, right, is really not about how much you contribute on a yearly basis to reduce your tax, but it's more about the later part, where because I believe that along the way you contribute your SRS, you definitely are growing that pot to a bigger amount. And if you are not able to plan properly, along the way, your money are not being withdrawn, right? Then at the end of the 10 years of your withdrawal, you will face a higher tax implication. So to put that in simple terms, right, or to summarize what Ben has mentioned, right, based on the tax table right now, we are able to withdraw about 40,000.
Non-taxable.
Non-taxable amount. Assuming that you do not want to pay any tax, you do not have any rental income, and you are not working anymore. So for 40,000 is the magic number that you can withdraw without being taxed over the next period of 10 years. Yeah, but in between, let's say you decided not to do anything, and you leave a big amount at the end of the day, right, after 10 years, then that full amount will be taxed. And imagine you have 400,000 inside, 200,000 inside, that will be taxed 50% of it. So they will assume that you have, let's say for example, based on 400,000, they will assume that you earn 200,000 amount. So your tax bracket will be based on 200,000. Instead of actually you are able to do it 40-40, you no need to pay any tax in between.
Even actually just now you mentioned, right, I can invest in technology.
Yes,
yeah,
correct.
So actually, what kind of investment can I do with SRS?
So like what I mentioned earlier on, you are able to invest in equities. You are also able to invest in Singapore government bonds.
But our friend here likes savings.
Savings, yes, you also are able to do it. Yes, Singapore government bonds,
Yeah,
you
the
use,
government bonds.
fixed deposits also,
fixed deposit.
they are able to do it. So it really caters to all groups of people with different risk appetite. And looking at different time horizon as well, even though you only can start withdrawing at a later age. But I think it really behaves a little bit close to cash, but you only can withdraw later on. So you are able to still invest in Singapore stocks where you are able to collect
Can buy
dividends.
insurance or
Yo,
not?
but why so complicated? Government give us CPF enough liao lah.
Like what I say, lor, I think it really caters for different group of people. If you are looking at reducing some of the tax, but at the same time you want to do some retirement planning and you want to invest technology funds like
Actually, SRS is quite good for single, right? I mean, CPF, you need to make nomination, right? This is for your next of kin. But
But
SRS,
hor, my female friend tell me something, okay? The female friend, be careful, okay? My advisor say that there is a tax limit for how much you can claim. So, must not put in SRS if really reach the limit.
so what's the limit?
you know,
Ask Ben lah.
If I'm not mistaken, total amount of tax deduction annually is 80,000.
That's for female lah, working moms lah. 我们这种 this kind of
Guys very hard to hit.
very hard to hit 80
yeah,
lah.
very difficult lah.
But yeah, she did say it's for females lah.
Meals lah. Meals
Working
very hard
mom
lah.
lah.
Working mom then got chance. For us a bit hard lah. Even we went to
NS also
and
not
all
enough.
this
yeah, no way lah.
Yeah, so
没有生孩子吗？
没有生也是不够。
yeah.
没有，我要
Yeah,
问
it's-
Q about那个 investment， then 还有 bond fixed D。
No, actually the main thing is you make sure you do something with your SRS, because if you leave it idle, I think the prevailing rate is similar to a bank savings
Estelle like
account.
to buy insurance. Can buy insurance?
Can, but it's a little. You need to plan it out very well, because as what Kieran said, so at the end of your 10 years, if you don't withdraw it, the 50% of it is taxable. So you need to work out something which preferably would end the payments out within 10 years. But as mentioned also, I mean the tax amount is not going to be that great if you've been withdrawing consistently.
So back to Lenin's question about buying insurance using SRS, right? You are not able to buy insurance, like protection insurance, like when you die you got money, that kind.
Yeah,
No,
yeah,
you
yeah.
cannot use that. You also cannot use for your whatever hospital plan. No. But
Okay.
I think what people are usually doing for insurance related product are really more for wealth accumulation, more for its purpose of SRS account, like what we say for retirement. So using that, you are able to invest using insurer kind of related insurance product that invests through them. So you are able to invest in your technology fund through that platform.
I see,
Yeah,
I see.
or retirement guaranteed plans that you are able to do that. Yeah.
Quite good, right? You got tax relief, then your investment return. Actually, net the 50% tax also actually.
Actually, not too bad for people who are really planning for retirement anyway, because you are planning for a longer term and you need the tax savings as well, especially for high income earners. Yeah,
I
correct.
see.
So I think personally for myself, anybody that earns maybe about 120, you will be able to save about 12% based on that bracket.
Wow.
In
12% savings account, how much?
Not much.
Not much, like how much?
Nowadays the rates drop a bit. Yeah, used to be much higher.
I mean, savings account maybe can give you
Fixed D lah, not savings.
Okay, fixed D 3%. But if you contribute SRS, you make what? 13%, right?
Savings lah from tax lah.
Yeah.
And
The tax part.
Then you are able to use that amount to do whatever kind of
To get your 3%
investments.
fixed D lah, if you wanted to.
Yeah, more
think
on
had to
asset
be-
allocation lah.
But I think have to be careful about the cash flow, because my advisor say that if you need the money in the next few years, you better plan your cash flow. You don't last minute want to buy house because go and see the show flat, then later no money you buy, you will have to withdraw from the SRS. I think Ben got penalty or not?
It's just 100% taxable. So whatever you draw is 100% taxable.
No, I mean, if I never reach my statutory retirement age.
Yeah. So whatever you draw, there's 100%. So 100% of whatever you draw will go into your income tax.
But I think there's a penalty as well.
I think it's 10%.
10% if I'm not wrong. Yeah,
Wow,
so
actually it's a lot also,
of money. So meaning to say that apart from the tax that you never pay, you got to pay back, plus the extra 10% that you are going to withdraw.
Why do you need to pay back the tax?
Because initially you already
Enjoy
the tax relief,
Yes, and it's also for
so
retirement.
basically, yeah, correct. So basically, you need to pay back the tax that you didn't pay early on, and then
my.
plus a 10%. So let's say, for example, if you actually contribute about 100,000, and imagine it adds on to your tax that year, assuming that you earn 100k, you withdraw 100k, it becomes 200k anymore, plus a 10% penalty.
Yeah, so you only get 90,000.
Yeah, correct. So it's quite a it's quite an important thing to do in terms. I think Estelle mentioned about cash flow. So it's really more for retirement, for the long haul lah.
So
for-
once you are in, you are in.
You are in. But the good thing is that you need to contribute on a regular basis lah.
Yeah.
At least this year your bonus a little bit more, you contribute more, or you contribute. Next year if cash flow is not so good, then you don't contribute.
But but for me, I always feel like don't let the fear of the penalty and the tax affect you that much, because when you don't need the money, you are getting a better return. But if you really do need the money, at least you can take the hit of the penalties and the tax, and you still have cash. So because sometimes people really need money, so why not just use it? Alternatives are like what? Policy loans, surrendering life policies. So to me, you only contribute what you can contribute into your SRS. So if one day you really do need the funds, you shouldn't be worried about the 10%.
So don't need to contribute the 15,300. Maybe you just contribute 5,000.
Yeah, but if you need to withdraw, if you have to, you have to. You don't need to be so caught up about the penalties and the tax.
Okay.
I think Melanie brought up something very interesting. I think a lot of people are very fixated that I need to contribute 15,000 every year. But actually you can contribute 1,000 this year. Next year you can contribute 5,000 So no need to be 15,000 also at the same time.
But then they want to max out the.
Correct.
Yeah.
So sometimes it's maxing out on this portion that it becomes hindering your own
I think
progress.
a balance
Yeah, a
lah.
balance. Yeah, correct on this portion.
Okay.
I mean, ultimately, I think it's a good plan if you earn 100 and above. It helps bring down your tax quite a bit.
Yep.
And you still technically have access to it if you really do need it.
Actually, some forced saving is good. If too much money in the bank also, you tend to squander away, go holiday,
No,
and
kena
buy
scam,
expensive.
kena scam.
Yes.
Yeah, they kena scam.
You get locked in the SRS. It's very hard for the scammer.
Yeah, I don't think so.
Yeah,
Government will
yes,
lock it up
correct.
for you,
The
yeah.
government, in that sense, will lock it up for you, and it's harder for it to be scammed away lah.
That's right.
Yeah, because SRS cannot do
cannot
digital
withdraw.
transfer.
Yeah, cannot just-
do digital transfer so
That's
easily.
why. Good point.
Yeah, correct.
Yeah.
So I guess with that, maybe Estelle, you want to share with the audience a key takeaway that you have for today. I mean, after asking so much of our question, right? What's the biggest takeaway in today's SRS segment?
Number one, women, please earn more. If you have children, please don't gong put into SRS. Ask your financial advisor, because there is a tax limit of 80,000. Make the men work more because they cannot hit the limit. And number five, if you got the property income, please add it into your tax consideration, because it will also affect the amount of tax you pay.
Wow, not bad. Good.
Yeah, I guess with that, thanks a lot everyone for joining us in today's series of talk show. Kieran here, this is Estelle, Lenin and Ben. If you have any questions about SRS, do feel free to drop us a DM. If not, do like, share and subscribe. Just
Bye.